Hey everyone and welcome back to the channel. In this video, Preston Pish and James Lavish discuss the pressing issue of inflation, exploring its impact on economies, governments, and everyday people. They analyze recent statements from political leaders, dissecting the disconnect between official narratives and economic realities. Additionally, they delve into the alarming levels of US government debt and unfunded liabilities, highlighting the potential ramifications for future economic stability.
I've always been of the belief that hyperinflation is something that happens in developing economies or other parts of the world that you hear about on the news, and it's never really going to come to the UK. It's never really going to come to the US. But actually, we spoke about this in the UK. I mean, we talked about one of the ideas is that you could run triple-digit inflation to wipe out the debt. And so I think the reason it's important to keep covering this is, you're the experts. Where are we? How bad is it? How bad could it get? What's the time frame, and what can people do? They're really important questions.
Yeah.
Well, to your point on the credit card example with the rates going higher. So when you look at the last year, we've seen inflation pull back, but yet you've seen Treasury yields across the entire duration of the yield curve continue to go higher.
Right. Let's define that first. That inflation pull back. We still have inflation. It's just not
disinflation.
It's not as bad as it was, but prices are still inflating. Yeah. So sorry. Yeah. That's something that
that's an important term.
The government wants to confuse you on that. They say prices are going down. No, they're not. The rise, the rate of rise is going down, but it's still rising. So go ahead.
Yeah. That's a super important point.
Let me add to that. That's where our Prime Minister, Rishi Sunak, has been gaslighting the British people, because he's been saying, they asked about tax cuts recently. He said, and he said a very honest thing about inflation. Have you seen this? Actually, this is wild. Get this up. Yeah. But he did say also that I want to bring down inflation so people have more money in their pockets. I was like, hold on a second. If you bring down inflation, they're not going to have more money in their pockets. They're still going to have less money in their pockets. It's just at a decreasing rate, but you're still going to have less money because you've still got inflation.
Yeah.
And that was a fucking lie.
Yeah.
And I was like, are you lying, or do you not even understand it yourself?
It's the same exact thing that we had with our press secretary here. She was gaslighting us, and they just refused to answer the questions. They just keep pointing back to, it's getting better.
Watch this. So this is some wild honesty.
It's a tax. It's a tax that impacts the poorest people the most. And that is why the best tax cut that I can deliver is to halve inflation.
Well,
and that's why I set it out as the first.
Let's not have
economically, the impact that it has on people is to eat into their pockets, it eats into their wallets, it puts up the prices of things, it effectively acts as a tax. And that is why we must bring it down, and that's why we are, and the plans are working.
But my question to you, Prime Minister, this morning is about the impact of the changes that you have been making. And you're explaining that you think they're the right things to do, and you're basically saying, bring it on to your critics. But on the one specific, your close colleague, Michael Gove, this morning has said that you should commit to cutting taxes for working people before the next election.
So she's trying to argue in the background. I don't know if you heard her. She's saying, but inflation is not a tax. And the Prime Minister is saying, yes, it is.
It is, yeah.
And so now he's kind of being honest.
Yeah, it's interesting.
Yeah,
it's interesting.
Which is wild.
Well, but I want to hear what else Preston has
sorry,
said.
Preston.
No.
I disrupted you.
I find it crazy that the BBC's arguing on the opposite side of that. That was crazy. And James's point is really important. So you have disinflation, which means the prices are still going up. They're just not going up as fast as they were when they were 8% annually. But when you're looking at the yield curve and you're seeing it continue to blow out, the yields are going higher, which means the prices are coming down. You would typically see that if inflation was rising, you would see that behavior in the fixed income market, because everybody would be trying to adjust and have some type of yield on top of that inflation rate, or which is really kind of your keystone that you're trying to outpace, or your hurdle rate is whatever that inflation rate is. So the fact that we're seeing that continue to sell off is effectively the example that he provided with the credit card, where the rates keep going higher because they're getting to the point where James wrote this article a year ago or whatever it was. And it was kind of like, oh yeah, look at this guy over here. He's some Twitter guy.
A macro extremist.
Look at this. Bitcoin.
I had so many people come into that thread and just say, you're out of your mind.
You're out of your mind.
You're exaggerating. Oh, you're exaggerating. And then
Luke Roman told me,
math, right?
Luke Roman told me, he goes, it's not just some random Bitcoiner and some guy from Cincinnati talking about this debt spiral anymore. He says, it's everybody on Wall Street. It's like very credible people talking about what James highlighted a year ago, that the math isn't working anymore. And this is looking like we're crossing the event horizon and there's no return.
Well, Caitlin Long said this to me 4 years ago. She said, is it even longer?
I'm not sure.
4 or 5 years ago, I made a show with her and Safety, and she was like, they're running out of bullets here. And I don't know when it's going to hit, but it's going to hit. And I mean, Foss has been saying it for like 2-3 years.
yeah.
He just says it's math.
Yeah.
It's math. That's all it is.
Here's the best part. Danny, scroll down to the bottom there.
Oh, they've got
see
an amazing new mobile app.
Up to the right there in the bottom red. This is the real problem.
Yeah.
So
yeah,
that's what the
real
government
problem.
really owes. It's got $195 trillion of unfunded liabilities.
Hold on. 195 trillion.
Yeah, because
What?
That's what we owe.
the promises. So
those are
like
the
this is
promises.
accounting for the promises of
Social
It's Social Security.
Yes.
and Medicare, Medicaid,
Yes.
and all that. Yeah. Yeah.
Over what time period is that really?
That's got to be about 30 to 50 years.
yeah, I'd say so. Yeah. So you'd have to do like a discount.
Yeah,
You'd have to discount it back, but then like what discount rate are you using to figure out what the
That's everybody. That's every worker. You know, it's all in there.
So that's 6 trillion a year.
But still, now you know. Then if you bring up the chart that with the gold chart that I did not do this research.
The Treasury chart.
Yeah, and this is the problem. This is where we're headed because of all of this. Now I don't know if it's going to be 2036 because he's backing into that number through debt doubling every 8 to 9 years. We're 33.
the M2 is compounding at like 7 to 8%, right? So it's at 10 years, you're going to double. That's a 10-year double rate, right? Mm-hmm. So
I mean, explaining this to people who are listening and not on YouTube, it looks like around 1970.
yeah, I think that's accurate.
Well, if you think about it, in about 2025 or 2032, we'll be at 66 or 70 trillion dollars of debt.
Well, I was going to go back a step. So this chart looks at about 1971. There was about 2 trillion of debt, and by 2000, that's about 5 trillion.
I mean, at the end of the day, it's log. Like you're dealing, if the money is compounding it from the M2 standpoint, right? If we look at M2 and we do a compounded annual growth rate on M2 over the last 10, 20 years or whatever period you want to use, it's around 7 to 8%. So when you're dealing with that, this needs to be in log. This is in linear terms. So that's why when you're looking at things like before 1980, it looks like a Bitcoin chart basically because you're dealing with compound.
It's hockey stick.
Yes.
Yeah. But here's another important part about this is people will comment, yeah, but this doesn't matter. You have to look at GDP against it because if GDP is just as high, then it's fine, right? Well, it's not going to be because GDP is not growing at this rate. It's growing at a slower rate, much slower rate than debt now. And, the problem is you're not going to be able to cover this with earnings without what? Inflation. Period. You need to inflate because you're not going to have enough productivity, natural productivity, to keep up with this pace of debt creation. So you absolutely must have a high rate of perpetual inflation, which is not 2%. So even if the Fed drives down, we go through a recession. What is going to happen if we go through a recession? Well, our receipts. Right, our tax receipts are going to fall. They're already down.
They're already down.
They're already down 10%.
That's the crazy part.
Yeah.
They're already down, and we haven't even got into that part of the cycle yet. And so can you imagine what they're going to be when you do get into the depths of that?
So what will they have to do? They'll have to create money. So they'll have to print money to come into the markets and shore them up and make sure that GDP doesn't fall dramatically off a cliff because then tax receipts will fall and this number will only get worse faster.
So, what do you think about this conversation? Do you agree with the arguments presented by Preston and James? Also, did you learn anything new from this interesting conversation? Let us know in the comment section below. From this conversation, we learned about the complexities of inflation and its impact on various aspects of society. The speakers discussed the discrepancy between official narratives and economic realities, particularly regarding inflation and government debt. The conversation also highlighted concerns about the potential consequences of printing more money to address economic challenges, which could exacerbate inflation. Overall, the discussion shed light on the complexities of inflation and its implications for economies and governments. If you enjoy this type of content and want to see more, make sure to give this video a like and subscribe to our channel. Until next time, keep learning and keep stacking.